Hello, welcome to or plus beyond new week. Today be Monday. It's 7:14. Uh, yeah, here we are with a trade. We're not entered yet. We're just set up for one. It's a bad idea. Let's just do it like that. Let's hit news. Here's our news. USD's got one red folder at 10. It is ISM services PMI. So we should be seeing price for these two numbers here. We had one and another that was lesser. If it's greater than forecast, it's good for currency. If the number's red, it's going up. If it's green, it's going down. That's what I get from news. We have our key level set up here. Here. Same story here. Stuff. There's our first retrace there. Upper value gap in sight. Just the one red. Unless we get to the NASDAQ, in which case there is fair value gap here. There is a break here. I think price is going to continue higher. This fair value gap here. Okay. We have one sign on the 4 hour that says price is going to continue higher, but everywhere else it's saying price is continuing low. We have one fair value gap on the hourly. Sorry, I'm wrong. We have a few fair value gaps. One, two on the hourly. Let's say price is moving higher with the or lower, with the exception of that fair value gap here. This is what we're looking at for our candles to determine whether or not price is going to go up or down. This fair value gap is going to get respected. Sorry, not disrespected. And it will be respected within this time frame. We'll see it come down into, but we won't see it cross below this line, nor will we see it close below this fair value gap here. We want to see this respected. We want to see price break up above this. We want to see price close above this to break out of this downtrend we've got going on here, because we did have a closure below this previous low here. We had a closure below this low here. I want to see price continue higher. Close up above this line here. That's our break of structure that we need. 1 minute. 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 1 minute Before that, I do believe price will need to come down, touch this key level one more time. That'll be our liquidity sweep. Once that has officially swept the way we want it to, we'll be looking at that. A break of structure away from. We want to see a reversal from this mini downtrend on the hourly back up into an uptrend. We want to see it continue up higher and take out this high here. It's not too far out of reach now. Let's go to the 4-hour right quick. This actually looks reasonable, kinda. I think that is good. Looks like we've already capped up off of this high here for the NASDAQ. High time frame S&T divergence. The NASDAQ's making a higher high while the S&P is making a lower high. What's this say to me? It says to me that price is going to go higher on the S&P 500. So we might want to pay attention to the NASDAQ to see exactly what the S&P is going to want to do next because it's lagging behind. That is the exact same high. That is Wednesday 2nd, April 2025. Wednesday 2nd, April 2025. So we have a high time frame S&T divergence. We have a fair value gap that we know needs to be respected for it to continue higher, which is the setup we're after. That's on the 4-hour thing. It's not, well, it is on the 4-hour. We have one on the 4-hour right here. So it looks like that one was disrespected. So would be the hour. Would be the hour that we're looking at. 4-hour was disrespected, saying it'd be going higher. NASDAQ is creating a new high. So on the lower time frame, we'll see that reflected. It seems because the high was made, and we have a fair value gap from the previous high. We're looking for it to get respected. Good grief. We're looking for it to get respected, and from there continue higher. How much higher? Again, we don't know. I do know we were looking at a high time frame confluence earlier that said price needed to retrace and that we should have been on the lookout for it. We still are. Don't mistake me. We still are. I'd like to see what price is going to do today, though, before I really make a decision. I really want to see if price is going to come down, hit this key level here, and I don't mean close below this key level. I mean wick it. Price has to wick this key level, and then it has to continue higher. It can wick as far down this year. That's completely fine with me. It's got to wick as far down, and then so long as it's a wick and it's not a closure, I'm completely fine with saying that have it hit and continue higher. As long as it closes above this green line and above this gap, which go ahead, let's go ahead and just mark this. Because this fair value gap is the same on both the NASDAQ and the S&P 500. I want that to be very well done. We also have a fair value gap here. We have a fair value gap here. Though we would like to see that one reversed, we want to see this one here reversed much sooner. Because this is the one that's going to give us a break of structure. We'll see a reaction off of this one much quicker. Boom. And the idea could be wrong completely. That's wrong. That one, this one. Okay. So two fair value gaps we're looking to get disrespected. The one above has a minor key level that, I mean, they both have key levels on the either ends of them. We're looking for the fair value gap specifically to get disrespected. We're looking for this high here to get closed above. I'm going to go ahead and mark this high because it is a key level draw liquidity that we're looking to get hit. Let's do that. This key level being closed above is my defined, like well-defined answer that yes, price is going to not only continue higher, but we're not going to see a downtrend from this mini break of structure here on a high time frame. And that lines right up with our key levels too, because right now we see price down. We see price coming up, and neither of our key levels have been hit quite yet. So it's a matter of waiting at this point in time. It's 9, this is 8. Let's do this first. 5. Okay, cool. Good. All right. What else am I missing? If our key levels marked. Looking for high time frame confluences to help me out in the help me with identifying where price is going to want to go for the day. If we looked at the higher time frame, we have a fair value gap on the weekly saying price is going to continue higher. Okay, but not that right there. Okay, so this doesn't fill anything. Instead, we actually do have a value gap here. we're within this week. So we should see in the next 4 days' time at the end of it, either price continue higher, price continue lower. But if it leaves this fair value gap open for us, then one, we'd have an inverse fair value gap saying that this downtrend is over. Two, that price wants to continue higher. So we'll see it continue higher. Right now, there's a fair value gap saying price might continue higher. But for the daily, we're in a downtrend. And again, I understand 5 days in the week, 1, 2, 3, 4, 5. I get that. It's all about the confluences, the signs that price is going to move higher or lower, depending on where price has been. So, with that being said, what in the most recent set of days we got past 3 weeks says price is moving higher? Well, we'd be looking for a break of structure right here. Up, down, highest point, got broke above, boom. We're looking for, that's the most obvious sign of reversal, period. Outside of a liquidity sweep, and we didn't get that except for like right in this. And because of all these breaks, it was quite difficult to tell. It was even a liquidity sweep off of this. So the most obvious sign we got, break of structure here. And from that, prices continued higher, though it hasn't broke past the next most recent high. We've entered a retrace, in my opinion. And then from that, we have our chart that we look at. It says we're in an uptrend. The past couple of hours we've been in the downtrend. And we're dependent on 2 fair value gaps. One to be respected, one to be disrespected, to know price is continuing higher. And if this one is disrespected, we know price is going to continue lower. We have several fair value gaps on the way down that can say that can be respected in order for price to continue higher, or it can be disrespected, price to continue lower. They say that price should continue higher, which it has. From this fair value gap, continues higher. From this one, it continues higher. And then even from this one, continues higher. Though this one has not been inverted yet. So that one filled a breaker block. Let's see. Okay. We're just waiting to see what exactly is going to happen now. I'm going to pause up until the key levels hit, and then from there, we'll build our building blocks, and hopefully, we'll take a trade. BRB. Okay, so it is almost 9 now. Right now, price is currently sitting right here. In 38 seconds, it'll be closing like roughly in this. Wanted to unpause because it hasn't hit this, though this right here is the key level we want it to respect. If we were to treat it as though we're respecting it, and after the closure, it's created a new low, and the candle's going up, which means prices continuing higher from the candle down. 1, we created a low. 2, we created another low, but it wasn't lower than this one. Not a break of structure, but a respected fair value gap. Okay, from there, let's treat the respected fair value gap as though it is a respected fair value gap. If that's a key level I'm willing to let slide, let's take a look at the 5-minute. What would we be looking for on the 5-minute to determine if that fair value gap was in fact respected? Well, first, a break of structure. Remember, we're in a downtrend on a high time frame. We're looking for a break of structure that would indicate to us price is going up. I'm seeing that break of structure right now, and it was from the low. You go down to the 5 minute. I'm pretty sure it's actually got it. Yeah, that's 4 minutes. So here we have this right here, right? This candle shoots high above this. It breaks out of this. Goes high, identify a high, up, down, boom, highest point, boom. It closes above. And price is continuing higher. That makes sense so far? We broke structure, and we got a fair value gap off the same candle. It's not an inverse fair value gap because there are no fair value gaps going down into this here. We had an inverse fair value gap here, and that wasn't until afterwards. Shoot, we could have done that. I didn't see that a second ago. So we had a fair value gap here. We treated this right here, this low specifically, as the key level hit and respected. 1, we got our break of structure earlier on this candle. 2, we had a fair value gap here as well. 3, if we were to go down to the 1 minute, we would have gotten a break of structure again, if I'm not mistaken, over here. That would have led us to press buy and let it continue higher. So far, price has indicated to us that it does in fact want to go higher. Okay. We need that fair value gap disrespected though. As respected as many signs as we can put in this right here. Saying price is going to go higher. I still want to see this fair value gap right here disrespected before we enter market. This fair value gap being disrespected is a key level and the confluence sign that price is continuing higher. Either it's disrespected or we're not trading. Plain and simple. Because we've already technically had a key level hit, what we're looking for is on the 1 minute a large time frame inverse fair value gap. That's what we're looking for. Which means here, yeah, it's marked plain and simple. This fair value gap would need to be disrespected. The large time frame. I wanted to see exactly though if we could make a profit off of seeing this here being respected, and then from that looking at the 5 minute as though this fair value gap, not this level here, but the fair value gap as a whole, after it was disrespected or respected. We wanted to see if we could make our building blocks off of the fact that it was hit, respected, and continued higher. I'm looking at it on the hour. We have not broke structure yet. Again, that would have been our second confluence, because we know this was respected now, right? On the hourly, we could see that here being respected and it forming a new high up here. You want it to break above this high here. It's got to close above it. This is the sign that this downtrend is over and that it's going to continue higher. Once that becomes a thing, it's just a matter before it comes up into this, disrespects this high here, and it'll be a large wick because that is a strong draw on liquidity there. That is essentially what we're waiting on, though. I'm gonna pause the video again because I don't want to sit here and wait while the video is just rolling, right? I'd rather have you guys just caught up with what I'm doing as I do it. So, that being the case, we'll be right back. I believe the next time I'm pause, I will have found more of a confluence, a more solid confluence to work with. Um, Hopefully, it's in time for us to actually build up to taking a trade today. I know around 10 news is supposed to hit, and it's a PMI red folder, and the general number is going down. So we should see price continuing much higher per news. I have been wrong in the past, and I'm expecting to be wrong now. So the grain of salt is know that price has a great potential for going higher, but just as much as it has a potential for going higher, due to this large wick up, it has enough potential to come up here, sweep this high, and actually continue much lower. That's what I'm looking at. That's what I'm thinking is going to happen. I'll mark those up. I'll mark these in the 5 minute. I think I'm making a mistake when marking these highs and lows right here, right? Typically, when I go through this right here, I try and get as accurate as possible. I don't know why I'm yelling so much. Good grief. But going back to what I was saying a second ago, I think I'm making a mistake because I'll mark the highs on the 5 minute, like for the hour, for the whole like session, right? Let's talk like Asian, London, and New York session, right? What I'll do is I'll look at the highs and lows, right? I'll see, okay, this is the highest point in the hour, and this is the lowest point in the hour. Highest point right here, lowest point right here. Cool. That works until I get down to the 5 minute, and then the high now becomes wrong because it's much lower. And I understand, like, there are differences between them, but I'm looking at stuff like this right here. This right here. This does not appear on the hourly at all, right? This right here does not appear on the hourly at all. It just does. This situation right here where we have a down, up, right? We're looking for the lowest point between all of that, and it's pretty much in line with itself. And then when I go back up to the hourly after marking it, the key levels don't make sense. Well, they do for this here because this is the highest point, this is the lowest point. But for Asian session, this right here makes no sense. Having it right there. Instead, it'd be better off being placed like right there. I don't know. So I think what I'm going to do from here on is when I mark key levels for the hourly, what I'm going to do is I'm going to mark them for the hour first. And then save myself some time and headache, what I'm going to do is I'm going to lock all the drawings on this level to this level and higher. When I move down to the 5 minute, one, outside of these three here, it'll be a clean slate. Two, I'll remark the highs and lows. The highest point here, lowest point here, highest point here, lowest point here, right? On the 5 minute. This way, when on the hourly, we have a key level hit, and we want to identify specifically where at on the 5 minute we see that key level hit, it's as clear as day. Oh, it crossed this line. Okay, let's start building in the opposite direction or continuing down. Let's build in the direction our bias is in. So that way, it's a clear picture from start to finish. We are entering the market on confluences built across the hourly, daily, and weekly for the general bias, and then of course the 5 minute because of course the general time frame confluences. We want to make sure the trend is following the higher time frame. So that way we're getting the most out of it when it comes to identifying building blocks needed to enter the market. I think that's an okay approach to the situation because there's a lot of desync within the market. And the 5 minute is a great time frame to watch price form on, simply because minute by minute could fool you into thinking, oh, price is going to do this or price is going to do that, when in actuality it's the hour continuing on with its trend. Alright, higher time frames hold higher confluences, and to miss out is kind of stupid when I could easily just check the hourly and work with it. Yeah. We want that high broke above. Come on now. It is 9/11 right now, just so we're on the same page. Oh yeah, happy Cinco de Mayo. Forgetting May the 4th be with you was yesterday. That was a long day yesterday too. Good day just to relax on. Just very overall good day. So I found a video earlier. I know I haven't paused the video yet. I ought to. Looking at this high form on that though. It's not there. I'm gonna say the short story and then I'm gonna pause. Okay? Okay. So I found a video online. I don't know if it was on this channel. Maybe been, or could be wrong. But I found a video on soundproofing a room. I know a lot more than I did a second ago. I thought those pads, like all the black pads you see back there, um, would be soundproof enough. And it does kinda work. Kinda. I could still hear stuff through the window. I could still hear stuff through what wall isn't covered. Um, and I understand what it's going to take to actually soundproof and completely deaden the room I live in. I understand what it's going to take to do that now. Just to completely mute myself from the outside world so I can scream as much as I want. I could be as loud as I want, and the entirety of it is like at the camera with you guys and not everywhere else. So I wouldn't have to get like super, like I wouldn't have to get like mad at because I'm too loud or I'm talking too much. That way you guys get content. I can make videos, stuff. Okay, that was pretty much all I wanted to say. I'm gonna mute. I'm gonna pause the video now, and we'll be right back. Okay. 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 So we had a key level hit. I know you can't see it on the screen. I'm gonna do my best to show it though. This right here. This goes red, goes all the way down here. clips past this line, the green line, not the fair value, just the green line. Wicks past it. It also goes all the way up to like the very edge of this right here. Right? That's currently what I'm looking at. That is a key level hit, aside from the fair value gap that we can look at. So what am I looking for at the moment? I'm looking for a fair value gap, sign of continuation. Actually, sorry. I'm looking for an inverse fair value gap, which is a sign of reversal, confirming that liquidity sweep or a break of structure out of the downtrend, the downtrend we're currently in. That was 950. Yeah, that was a 950 candle that hit that line. So now we're looking for break of structure or way around. Highs have not been closed above as of recent. So that's what we're waiting on that at the moment. A high to get closed above. That's going to give us a very clear indication of a break of structure. The goal is to enter in on a buy position because we think market is going to be moving higher out of this sweep here. Yeah. Inverse for value gap. We're going to get inverse for value gap. I think we'll see a break of structure before we'll see an inverse or value gap. Break of structure is first confluence. That one, the downtrend's over. We're moving back higher. Two, we move on to a fair value gap after that to determine price continuing higher. Ultimately, on a higher time frame for the 5 minute, that's going to give us the inverse for value gap on the hourly. Once that's done and discovered out the way, we're looking for a break of structure back to the downside so we can press buy on a cheaper position. And from that, make a profit. We have a minute 18 for this candle to close. Currently, it is within the red fair value gap you're seeing on your screen. It might be 9:50, almost 10. I'm still quite sleepy. News is about to hit in 1 minute. This is a news candle, so the news is deciding where market's going today. Hang on, let's go to news, see what it's doing, see what we got here. We got 44 seconds for this candle to close. Less, actually. Let's see what news has to offer. Yeah, it won't be an inverse value gap. It'll be a break of structure. 12 seconds. I imagine the number's lower, and as a result, we're seeing that green candle form. Hello, displacement. Holy crap. I know the screen's small. Can y'all see that? Y'all see the displacement on that joker? Good grief, dude. It closed and price took a hike above the fair value gap that we were after. It's higher than forecast, which means it's good for currency. Which means price is going lower. Way lower. News says price is going much lower. Good grief. So that's literally borderline next to impossible to read. I'm gonna close the app right quick and reopen it, see if that gap closes at all, because that is impossible. Yeah, what the heck? That gap is still there. Oh, not markets. 1 hour. It jumped on the hour as well. Good grief, dude. I'm beginning to think today is not a good day to trade. I'm beginning to think it's not. So you're seeing the key level I was talking about earlier hit just now. The news decided to bring a green candle up. I don't mean to yawn so much. I really don't. I don't feel tired. I feel like I had enough sleep. I woke up. Sure, I could take a cat nap, but I'm not going to. I understand. But go back to day trading. Market had price continue up to here, right? And it wicked into the fair value gap. There was zero reason after news for it to wick up into this, right? Price then jumped, and I do mean jumped because there was no open, close, open, close. Instead, it went open, close with wick in fair value gap to open, close, and it hasn't closed yet. It's like it's dancing around this. Price jumped into and above the fair value gap. News says price is going much lower. My reasoning behind saying today might not be a good day to trade, news says price is going lower, which matches with the general downtrend. We are in a downtrend. We're in a downtrend, not per this. I mean, generally speaking, we are in a downtrend here. And per the chart, it is a lower high. And then NASDAQ is doing the same thing over here. We have a higher high here. Actually, this is the divergence I was talking about earlier. This is saying price is continuing higher, which it has in some form. It has. I think the lagging chart in this instance is the NASDAQ because we made a lower high. We're currently in retrace, and news says price is going lower today. I understand this is today's candle and that there's still tomorrow to look at. However, we've been anticipating a retrace off of this move up for a while. There's just too much green here for there not to be a retrace. So we were expecting this retrace to happen. What we were not expecting was the 10 o'clock candle to come and go and to see price shoot up into our. It doesn't make any sense. Where the heck is. That's 9 right there. 10 should have started by now. This should be ended. Oh, no, it's 10 minutes delayed. My bad. It's 10 minutes delayed. I'm sorry. And now price is below the fair value gap. What the heck? You'll see it here in the next 5 minutes. Price legit like stops where it is here. Then the very next candle, it's good up in this. Stops here. Starts here and then closes below this. we had two key levels hit at the same time. One was the result of news, the one was before news. So, what exactly does that give us? Because it ain't a fair value gap. Like, that is really, really oof to look at. The fair value gap we got from it says prices continuing higher, which is cool, but news had a large number change. It was like a whole percent and some change. Kind of change, right? So, with that being said, looking at it, we didn't get a break of structure. If we counted that as just that, right? Price shot high, but the candle stopped in its tracks. So, from there, what am I thinking? I'm thinking if we treat news like it is its own thing, it makes the market change and can create gaps and a whole bunch of other stuff. What exactly can we treat that as aside from news to better help us take a trade? Specifically for this one, we hit a key level and it rose, which is what it was supposed to do. Price rose. Gold. We did not get an inverse value gap. We did not get a break of structure. We did get news jump up above, not above, but into a fair value gap. It respected the fair value gap. That's something to note. It respected it. It wicked above, but did not close above. Price came back down and closed below the fair value gap. So, I think what we ought to expect from market now is for price to continue up in the direction it was going in. Because that was a gap that was unexpected as a result of news. The reaction off of news should be from that gap, continuation higher. Should be. If it continues higher at the rate we want it to and closes above that fair value gap, I'm considering that a confluence made, an inverse fair value gap. Because subtract news from that equation, dance around it, right? We have a move up continuously. And with a closure above that fair value gap, there's our confirmation confluence that our key level hit down here was correct. This fair value gap was respected. We had a liquidity sweep and we had an inverse fair value gap for confirmation. After that, we'll be moving down to the 5-minute on both TradingView and TradeLocker and identifying the rest of the confluences needed to enter on a trade. We're going to do this very patiently and very cautiously because news says price is going down. The news candle, that is 10, did move down, but price in general went higher. I believe we'll see that here soon. Here's the 10 o'clock news right there. And you can see that gap I was talking about a second ago. It like goes up into this, respects it, wicks it. This continues higher, but ultimately comes back down and closes within this fair value gap. Or actually, sorry, it closes below the fair value gap, respecting it altogether. Our 10-on-5 candle decided it wanted to close inside the fair value gap as well. Price moved as low as this fair value gap, but it did not go into it. It still wound up closing inside the fair value gap with a wick up higher. If by 10:30 we do not see the confluence needed to continue with this trade, right? In general, if we don't see it, we're not gonna enter a trade. Just not gonna happen. There we are with the 10 o'clock candle on this one as well. Less of a gap here, but it's still a gap nonetheless. Price is going to come down. We'll see it here soon. Hmm. 2 minutes, 30 seconds for this one to close. I don't think today's going to be a trade day. How long have I been recording for? About an hour. I'm going to pause again. I'm going to unpause when trading view, like when I've determined one, I'm not trading today, and then two, when trading view has caught up with where I am with my decision making. So that way you get the best picture. Like I can identify beginning to end exactly what you guys might be missing out on to better understand where I'm going with that. I'm going to pause. BRB. So, I don't know about this one, Chief. I don't know, Mr. Keefe. I don't know about this one. So, so. This candle, this gist right here is 2 candles behind. Just so you know. Subtract, like, add 2 candles onto this. One here, and then one there. Do you see the white line? Do you see this white line vertically up and down right here? Right? See how it's got the green thing there? If I move it over just a little bit, you'll see another white line that goes all the way up past this and all the way up into here, right? You don't anymore. You did a second ago. See the white line on that? The vertical one? I know the screen's small. I know my face is probably more so than the phone. That's currently what I'm looking at, though. The market, when news hit, completely just flipped its script. In the sense of, now I don't know how to read this because of one, a gap, and then because of two, the same instrument displaying 2 different candlesticks on the same time frame. They're the exact same. This is a new instance for me. I don't know what to do about this one. We're going to do this. I'm going to look it up. I am going to disable. Oh, wait, you couldn't even see news. Okay, that's fine. I'm just going to look it up right quick and get it good. You haven't been able to see news this whole time. I am sorry. One moment. So it could be a problem with the software, or it could be a problem with the data itself. So right now, let's just wow, there's even a Discord for this app. Let's see if my mobile app needs an update. It should. Everything is like relatively up to spec. Yeah, it doesn't need an update. Okay. So let's see if TradingView needs an update. It shouldn't. I don't know. Okay. It's small. Nope. I'm gonna look at something later. This. Hmm. I don't know. I'm not seeing any updates for this thing. I don't imagine it does updates, but uh, that was my phone. May have been my phone that was the problem. I don't know. In any case, we're gonna let that restart completely. We have not had a break of structure yet. I'm not seeing any indication that price is going to continue higher aside from a fair value gap, though this is a news candle. Price has not come back down into equilibrium yet. We had a break of structure on this candle here specifically, which confirmed this key level here. From this key level, we did not get an inverse fair value gap, but again, a break of structure. Up next, we would have had to identify either a fair value gap, order block, breaker block, or wait for price to come back down into equilibrium. Equilibrium is the distance between the most recent high and most recent low, right? We've drawn that and waited for price to come back down. Entered, watch it continue higher. I don't think it's going to come back down. I think it's going to continue higher. From that point, is currently 10:28, which means even if we identified, what would this have been? What would this block right here be? Because we got a fair value gap, right? But that can't be counted because it was before this break of structure. That confirms this. So we'd be looking for breaker block, order block, or equilibrium. Equilibrium's out, fair value gap's out. So breaker block or order block. Well, I don't think it's either because we had order block here, push past on this high here. Yeah, still displaying different information. I'm going to figure that out here later. It is 1 minute away before 10:30. I don't think we're taking a trade today. I am confident. Yeah, we're not taking a trade today. Okay, so de-risking completely. I wanted to, but market was not giving us a bone at all. It didn't give us what we wanted. So I'm not taking a trade today. You can see all of what I had to actually look through here. We waited on the 1 hour for our key level to get hit here. It did on this candle specifically. News decided to hit. We needed to wait 20 to 30 minutes after news to see a genuine reaction off of it. And that would have been on the 5 minute we would have been waiting on because, again, we had our key level hit. 2, we would have waited for our break of structure. We got it. We got the break of structure. However, from this point onward, I am right now unable to identify if this is a breaker block or not. If it's a breaker block, it's a failed retrace to continue higher, and so price is actually going to continue much lower, which is cool. I mean, that lines up with it. Or it's an order block, in which case, again, we're going to see that one of these is an order block. This is either an order block, and price is going to come down and sweep this, or this is an order block, and so price swept this high and it's going to continue higher. The bias would have been higher, but for this to have been higher, we would have needed to go down to the 1 minute, right? And from that, we would have needed to identify an inverse fair value gap, which this is not one because it is not above. That's not a fair value gap there. The fair value gap within that. So because this inverted this, right? That is the inverse fair value gap. As you can see, it came back up, stopped at that high, and is now consolidating. So I'm curious to see where price goes from this white line. So I'm going to leave this exactly as it is, exactly as you see it. Tomorrow morning when I wake up, let's actually, I'm going to enable browser view for a second so you can see what I'm seeing, because we want to see tomorrow's news. Tomorrow, there seems to be nothing, which is very good. Wednesday's out. Can't trade that. Tuesday, there's no news, though, which is very, 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 very good for us. We want no news on that. So, that's what we're after. With that being the case, yeah, uneventful day. I wanted to trade. That wasn't happening, though. That's what NASDAQ did. NASDAQ looked a little more like the chart on TradeLocker did. It had this exact pattern, even all the way up through here. This is what I was watching on TradeLocker, right? Except this right here was closed below this. Yeah, that's literally what that was. Let's go on the hour. I do believe price is going to go higher because we have an inverse, a fair value gap here as an imbalance. Yeah, we have a fair value gap here as an imbalance, as well as this one, and it's a draw. They are draws on liquidity, so price has plenty of room to continue higher, and it's already saying it wants to continue higher. So we'll see tomorrow morning when we wake up. But yeah, I hope you guys enjoyed today's video. I know it was uneventful. I wanted to trade really confusing. Good stretches. I hope you guys enjoyed today's video. I know I did. I learned a little bit. In the event you enjoyed it, give it a thumbs up. Subscribe if you're newer on the comeback. Comment down below what you think I could have done to better identify these building blocks, because I feel like I did the best I could. I waited for the key level to get hit, not just a respected fair value gap, but an actual key level, one of the lows, session lows. It got hit before I started building up to taking a trade. From there, I am confident in my ability to identify the rest of the building blocks, with the exception of maybe a breaker block or a fair value gap every now and then. But I'm working on it slowly, getting better at just reading the chart. It's going to help me in the long run. But yeah, subscribe if you're new on the comeback. I'll see you guys in the next video. Hopefully tomorrow we actually get a trade worth taking. I'll see y'all. Have a good one.